Just a very quick, well, it's going to be a daily forecast now, but we'll build it into the week. Unfortunately, it's a day late. I had some personal commitments that I was dealing with over the weekend, and even though I did do my markups and everything yesterday, I didn't have the energy to go through a full-blown forecast. My brain was shutting down late in the evening, and I was hoping to try and get it out the way earlier on today, but the market has moved from the zone that we were initially looking at. So we'll go through the week and we'll see exactly what we're looking at for the days ahead. Obviously, high volume days, Tuesday, Wednesday, Thursday, that's when we look for our trades. Effectively, it's a trending market on those 3 days. So we are hoping to kind of see one particular bias play out for the week, which is characteristic of GU. So we'll see Tuesday, Wednesday, Thursday, invariably every week kind of trends in one direction. So what we were looking at last night was we had already marked up from Friday. We had a spike up where the market had turned out from all-time lows down the bottom here. Consolidation, liquidation. It wasn't a prime setup, but there was most definitely absorption and a break of imbalances to go the other way. So as the market broke out of these zones, there was a trade taken down here by some individuals, myself included, and we kind of took the trade from this point here, and I effectively closed out at this point here when I saw the market kind of getting lax in terms of energy and push into Asia. I didn't want to hold the trade overnight and see it come all the way back. So I had these two alerts set, which are still active. We're looking for the market to come back, test into these areas as a retest, and that'll be our prime setup that we're looking for to take longs. At the moment now, the market has kind of pulled itself out of all-time lows, gone bullish out of that zone. Obviously, a lot of volume put into the market due to obviously tapping into all-time lows. COVID lows were taken at this point here. The market dropped out even further, pulled liquidity, and then moved out of all-time lows. So when we look at the areas we were then analyzing for the week ahead, we were actually at this point here last night. We had seen Friday highs. The market rejected out of that area and then consolidated below. So effectively, our supply was the area where the market decided to kind of get exhausted. There was a reason that it stopped out, which we can see a consolidation of wicks here. This zone obviously then sold down deeper and continued the push. So for us, that was an area that we were interested in seeing. I had supply marked up with the stop out on Friday, where the market reversed it and then respected in Asia. As we can see, it opened up and respected that supply. However, it then broke it during today. And the zones that we were looking for was this supply with the inefficient wicks that were kind of above, fair value gap above that. So obviously the market has now gone up, broken the zones, and we're now sitting in the area above, which we can see that the market is kind of consolidated, tapped perfectly into the 50% of the inefficient wick. And we have also got daily POC there, which is 7110, which is this line here. That was taken. The market has tapped that and moved away from that zone. So a compounding of confirmations that we normally look for. The market has tapped the daily POC. It's tapped the 50% of the inefficient wick. I believe that would have been on the daily or the 4 hour. Let's have a look. Yeah, so there you go. The 1 hour inefficient wick is what we were looking for. The daily POC was taken at that point. The market's rejected out of that zone, and now we're looking to sell down. So these areas that we had marked up on the forecast as supply are no longer relevant. They've been broken. We can get rid of that. And we are now looking to see on the shorter time frame, which is the 1 hour, where is our levels of interim demand. So effectively, the market's come, stopped out into this area, taken 50% of the wick, rejected out of that zone. We're hoping for some sort of a sell now down into demand to possibly buy out again. Now, I would like to see the market somehow get back down to these zones, because this is obviously where the maximum lows were held. We've moved out of that aggressively, and the market should actually come back to retest these lows. Whether it does that recently or in ages, that's not for us to dictate. However, these are areas that we were looking for a nice buy out of in the near future, hopefully. What we're looking at right now, obviously the market's kind of consolidated as of New York, wicked up, taken 50% of the inefficient wick on the 1 hour. There is supply sitting above, which obviously then broke lows. We can see that this level here was where the most volume came in, and the market shot down and broke all these lows, which is why it's caused such a reaction now. We'd expect that to hold to a certain degree. I can't see any larger orders sitting up here on the footprint or the institutional tools. But obviously it is a key area because the market did break down, took lows here, went back up, pushed up, supply here. So clearly there's a seller sitting above this point here as well. This is why it's termed supply. So now we're into the new week. We've got Monday going one way. I would hopefully expect Tuesday, Wednesday, Thursday to trend bearish. And then we look to target demand for a slight reversal on Friday and then see how the following week then materializes. So at the moment now we've come out of inefficient wicks. We're into an area of supply, and we want to see the market kind of reject down and then test demand below on the lower time frame. So the 1 hour demand that we can see here, inefficient wick, where absorption happened, pushed down, buyers got involved, pushed up, broke all these highs, and we then tapped up into supply down to demand. Now we want to see how it reacts out to demand, possibly respects supply again, or possibly goes for the upper supply and then rejects down. So at the moment right now we're looking for bearish bias to target demand below as our prospective TPs. Now it could be either or 1, 2, 3, but we will have to see exactly how the market reacts in London Open. We do have a few news releases tomorrow, and let me just have a look on the phone on the FX calendar and see exactly what we've got. Sorry, just let it load up. It should have been prepared, but tomorrow we have employment change, we have unemployment rate, we have claimant count change, we have the Bank of England governor's speech, we have inflation in the US as well. So there are quite a few news releases tomorrow, and it'll be interesting to see how the market then reacts out of that. Yeah, we would obviously wait to see what happens in the morning. We've got news releases in about 9 hours time, which is very early in the London session. Frankfurt to London is when these news releases will be done, and we can then see exactly what the situation is on the markets at that time. Prime zone for us to trade in. It's fine. Works well. It's within our trading window. So when we look at then key levels that we're going to drop onto the chart now, we can see that the daily pop was taken at this point. 50% wick was taken. There's a high volume spike that was not taken at the moment. It was left just slightly up below. So that was something that obviously may have led people to not then take that trade. Obviously, volume went into the market at this point. We've got a volumetric push, large volume order with a volume spike going in at this point, which kind of has pushed the market down. Now, where we look at how Asia plays out, we want to see whether it comes down, respects this bullish imbalance here, or taps into demand. There is a high volume spike within that as well, to see how it then buys up out. The daily POC from Friday was left behind in Asia today and not respected. So obviously it's an area that could get targeted for demand as well to then buy up out of. However, the initial demand that we'd be looking for is the bullish imbalance that kind of caused a push to break these highs and these highs. That high and that high is what I'm referring to. And then it came up and it took these highs as well with a consolidating move. So effectively, this is our initial area of interest. Then we've got demand below us with a volume spike. Then we've got daily POC, and everything else below that kind of is a milestone in the bearish trend that we are now hoping to see. So liquidity does lie above us, but at the moment, because of the way the markets reacted at a daily POC on Friday, it is an area for us to now look for sells, and we'll continue that for the week. We'll see how far down we get before Friday reversal kicks in. And then obviously we've got, prime areas down the bottom here with the consolidation of lows and key areas that we want to watch as well. So that's the forecast for the week ahead. Unfortunately, sorry it didn't happen yesterday, but I hope this has now given you some information on what to look for the week ahead. Always remember, Tuesday, Wednesday, Thursday, invariably always trends. So because we've tapped into supply now and demand, tapped into supply and the depop has been taken and an inefficient wick and the market has rejected out of that zone, we'd probably want to see sells out of that now. There's no area of liquidity left above us. The market has kind of respected that level that it tapped and then has now rejected. We want to see kind of break below these lows, take the fair value gap, test the imbalance, see how it reacts out of that imbalance, and then possibly it gives us a re-entry scenario to buy down, to sell down lower. Okay, hope it makes sense. As with everything, I'll be active on the social media and the chat again from tomorrow, and we can see where we go from there. All right, take care, guys. Bye.